Welcome in this video. What happens if we buy 70K Zbcn today? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. One of the most commonly used technical analysis tools to understand price movements in the market and predict possible future directions is trend lines. An uptrend is one of the most desired structures by investors and one that inspires confidence in the market. This is because an uptrend shows that the price is consistently making higher lows and higher highs over a certain period of time. This means that buyers are gaining strength in the market while sellers are staying in the background. In such an environment, the price touching and bouncing off the uptrend line is critical for the healthy continuation of the rise. The logic of an uptrend is simple but very powerful. This trend is usually drawn by connecting two or more low points on the price chart, and over time, this line moves underneath the price, acting as support. Every time the price touches this line, buyers step in and push the price upward. This indicates that there is strong demand in the market and that investors see the drop in price as an opportunity. If the price does not break this trend line, the uptrend continues without being disrupted. When the price bounces off the uptrend line, this is referred to in technical analysis as taking a reaction from trend support. This reaction is often supported by an increase in volume. In other words, when the price approaches the trend line, investors see this level as a cheap buying opportunity and make mass purchases. These purchases cause the price to quickly react upward. High volume at this point increases the likelihood that the reaction will be strong and lasting. It is very important that the uptrend is not broken, because when this line is broken, a psychological shift occurs in the market. Buyers lose confidence while sellers gain courage. When the price moves below the trend line, it means that higher lows are no longer being made, and this signals that the uptrend has ended. That's why in an instrument that is in an uptrend, the price holding the trend line and turning upward from it signals both technically and psychologically that the bull market is continuing. In this type of uptrend structure, each touch is an opportunity. Experienced investors see these touch points as buy zones. Assuming that the trend will continue, they enter positions at low levels. This strategy carries high profit potential, especially in long-term bull markets. For example, if the price has touched the trend line 3 or 4 times and turned upward each time, it shows that the trend is strong. In such a case, a 5th touch of the trend line can be a very valuable signal for investors. At the moments when the price touches the uptrend line, other technical indicators also often approach oversold zones. For example, the RSI may drop to the 30-40 level when touching the trend line. This shows that the price is near the oversold region and that the likelihood of a rebound is high. Trend-following indicators like the MACD may also give upward crossover signals at these points. Thus, when both the trend line and indicators produce signals in the same direction, the reaction movement can be much stronger. The uptrend line is also a reflection of market psychology. This line shows that buyers are defending the price at certain levels. Investors see this line as a kind of defense line. As long as the price does not move below this line, market sentiment remains positive. However, if this line is broken, sellers take control and market sentiment turns negative. Therefore, the price not breaking this line and taking support from it is critical for the continuation of the rise. Investors trading in such a trend often apply the principle, "the trend is your friend." This principle suggests trading in the buy direction as long as the price remains above the trend line, and closing the position when the trend is broken. This simple but effective strategy can produce very successful results in the long run. Because during periods when the trend continues, small pullbacks are seen as buying opportunities, and the price is gradually carried upward. In uptrends, the fact that the price reacts more strongly after each low shows that buyers' confidence in the market is increasing. Sudden rises near the trend line in particular prove how trend-focused the market is. Therefore, when the price approaches the trend line, it is necessary to think in terms of opportunity rather than panic. Finally, one of the points to pay attention to in order to maintain the uptrend is trading volume.
If the price touching the trend line is supported by strong volume on the way up, it shows that the trend is healthy. Reactions that come with weak volume may be temporary, and the price may return to the trend line shortly afterward. Therefore, analyzing volume at the moments of contact with the trend line helps make more accurate decisions. In short, the uptrend line is like the backbone of the price's upward movement. The price touching this line and bouncing upward without breaking it indicates both technically that the rise will continue and psychologically that market sentiment remains bullish. That's why this line is a vital reference point for investors, and the price bouncing from here is the clearest sign that the trend is maintaining its strength in the bigger picture. But we can't make a decision based solely on trends, so let's take a look at the other metrics as well. Stay tuned.
The Elliott wave theory is one of the most effective technical analysis methods used to understand and predict price movements in financial markets. This theory suggests that price movements in the markets progress in specific patterns in the form of waves, and that these waves form structures consisting of a total of 5 impulsive waves and 3 corrective waves. Through these structures, investors can predict which stage the market is in, possible price targets, and when movements might reverse. In particular, the third wave is considered the strongest and longest wave in the Elliott wave theory. Therefore, analyses related to the third wave are extremely important. Assuming that the price is currently in the third wave, there is an expectation that this wave will reach the 3.272 Fibonacci extension level. Fibonacci levels are mathematical ratios used in technical analysis for retracements and extensions, and it has been observed that market movements often progress in alignment with these ratios. In the third wave, the price is expected to rise to this significant Fibonacci extension level, 3.272. Reaching this level indicates that a strong upward movement has been completed and often signals that the price has reached important resistance points. Reaching the 3.272 Fibonacci level in the third wave practically means that the price will hit the target price level of $0.024. This target indicates that the price will make a significant upward move from current levels, presenting a high potential profit opportunity for investors. Technically, such a bullish movement indicates that the buying pressure in the market is very strong and that sellers are still struggling to stop this move. There are important points to consider in this analysis. First, the third wave is generally considered the most powerful wave, forming the largest portion of market movements. Therefore, during the third wave, the price reaching the 3.272 Fibonacci level shows that the market momentum is strong. Investors at this stage may choose to hold their positions or make additional purchases to maximize gains from this rise. However, as with any technical analysis, there are also risks here. Market conditions, economic data, news, and other technical indicators can influence price movements. Therefore, while the price is expected to reach this level, potential pullbacks or corrections should also be considered. During the third wave, small corrections may occur, but the main trend remains upward. If the price breaks the 3.272 Fibonacci level and holds above it, this serves as strong confirmation that the upward movement will continue. In addition, in Elliott wave analysis, after the third wave is completed, a corrective wave, the fourth wave, usually follows. This wave may cause a temporary pullback in prices, but does not prevent the continuation of the long-term trend. Due to the strength of the third wave, the correction of the fourth wave is limited, and the price resumes its upward movement with the fifth wave. From a technical standpoint, the 3.272 Fibonacci extension level is a highly critical resistance point. When the price reaches this level, it may signal to investors that it is time to take profits or review their positions. Therefore, it is important for investors to be cautious at this level and, if necessary, implement risk management strategies. However, if this resistance is broken, the likelihood of the price climbing even higher increases.
The main purpose of the Elliott wave theory is to understand the order in which market movements occur and make predictions about where prices may go based on this order. Reaching the 3.272 Fibonacci level within the third wave is an important part of this structure and is considered a positive signal for the market. Thus, the price is expected to rise to $0.024, which represents a significant increase compared to current price levels. In conclusion, the assumption that the price is currently in the third wave and that this wave will rise to the 3.272 Fibonacci extension level indicates that the market is in a strong uptrend. Investors can use this information to adjust their positions based on their own risk and return analysis. By also considering technical indicators, volume analysis, and other supporting signals, the likelihood of reaching this target can be clarified even further.
Buying 70,000 Zbcn today could be an important opportunity for investors, and making a mathematical calculation to understand the potential future value of this investment would be beneficial. First, let's assume we have 70,000 Zbcn. The current market price of these assets is set at $0.005. This means that the current market value of 70,000 Zbcn is approximately $350. In other words, an investor who wants to buy 70,000 Zbcn today would need to spend $350 to own these assets. However, calculating only with the current price is not enough to understand the real potential of the investment. Due to the dynamic and volatile nature of cryptocurrency markets, prices can change significantly over time. Therefore, it is necessary to calculate how much the investment could appreciate based on potential future price targets. Here, we will evaluate the investment based on a target price of $0.024. This target price may be a value expected to be reached by Zbcn based on certain technical analyses, market trends, or project developments. If the price rises to $0.024, the value of the investor's 70,000 Zbcn would be calculated by multiplying this target price. 70,000 times 0.024 equals $1,680. This figure means that the current investment of $350 would increase by 4.8 times. In other words, buying 70,000 Zbcn would mean holding assets worth approximately $1,680 if the price reaches the target level. This points to a significant return potential. When evaluating such an investment opportunity, it is important not only to consider the numerical calculations, but also the overall market conditions, the progress of the Zbcn project, and general developments in the crypto world. If the target price of $0.024 is supported by technical indicators, the project's roadmap, and market demand, it can be considered a logical and attractive goal for investors. If there is a strong reason behind this price target, the value of the investment may increase over time, and the return we calculated above could be achieved. Another important point for investors to consider is that it may take time for the price to reach this target. Cryptocurrencies often experience sudden increases and decreases, but for stable and sustainable growth, the project's fundamentals need to be strong. Developments within Zbcn's ecosystem, new features, partnerships, and the overall market situation will play a critical role in the price reaching the target. Therefore, investors should not only focus on price targets, but also analyze the overall outlook for the project's future. Of course, as with any investment, there are risks in cryptocurrencies. Changes in market conditions, increased competition, or negative news about the project may prevent the price from reaching the expected level or cause pullbacks. Therefore, risk management is very important when investing. Buying 70,000 Zbcn should be supported with careful assessment against these risks and portfolio diversification. In summary, for someone who wants to buy 70,000 Zbcn today, at the current price of $0.005, they would need to spend $350. However, when the potential future value of this investment is calculated using the target price of $0.024, it is around $1,680. This means the investment could increase by approximately 4.8 times, which is quite an attractive growth rate in the cryptocurrency world. However, for this potential to materialize, market conditions and the project's progress must be favorable. Investors should always closely monitor market dynamics, technical analyses, and the current state of the project when making such calculations while keeping risks in mind. This way, they can manage their cryptocurrency investments with informed and solid steps.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.